Are you wondering when and if the housing market will crash? Or why is the current market so hot? Is it a bubble? There sure is a lot of buzz about this and some PTSD from 2008. So stay tuned as we discuss California and the local Santa Clara County housing market with real data, so you get a data-centric answer and approach. Hi, I'm Theresa Wellman with HomeownerExperience.com, your local San Jose, California realtor. I help home buyers and sellers strategically plan their next move. So today we're going to get into several different topics. The first is key market trends to watch to understand any market shifts, which is going to answer why the market has been so hot so far. We're also going to talk about some leading indicators to help you understand how to keep a pulse of the market and if and when housing prices might drop. And then we're also going to review some history. So let's go ahead and dig into the market conditions on the slides on the computer. Okay, today we're going to talk about the market conditions, including inventory, demand, affordability, the local pulse on the market, and more. So let's have a quick overview. This is some slides that I'm going to be sharing today that were shared by the California Association of Realtors economist Jordan Levine. So here are some of his slides and charts, and then I'm also going to share some Santa Clara County local data for you to get a pulse on what's actually happening in Silicon Valley. So the rear view is very encouraging. There's a lot to be optimistic about economically. We're recovering, COVID, jobs, all that stuff is getting better. Housing has still led the recovery up to now because there's been such an increase in demand. We have low visibility ahead because there's some early signs that listings might be popping up, but we haven't seen a huge change in the inventory. There's also some signs that buyer fatigue is coming, and that could affect the market as well. So are things going too good? Well, price growth was largely explained by the factors with COVID and working from home and people with the top tech jobs maintaining their jobs throughout the entire COVID transition and shutdown periods. So that has all been changed. So how is that going to affect the market going forward? And the last thing we're going to cover is a forecast. I'm still feeling optimistic, but we probably are going to see some shift. Let's look at the data to really understand that more. So here's the Santa Clara County market housing history since the year 2000. Now, if you look here in this bubble, this is definitely a bubble. This is 2008, where I talked about people are having PTSD from 2008. So obviously the young buyers maybe don't remember this, but the mature buyers do realize and remember what happened in that, and they're fearful of that might happen again. So that's what I would consider a crash or a bubble. And economics of supply and demand are a huge factor in that. So we're going to get into it a little bit more. But if you look at the price trend here, the orange and blue lines, you see that we've had a huge price increase. And there was a pretty good price increase here in 2007 as well, and then a huge decrease, right? So that truly is a bubble. Well, is that what we have in our near future? I don't think so, but stay tuned. We'll talk more about this. So the key market factors that I briefly mentioned: inventory, demand, or days of inventory, how much demand and how fast it's eating up the inventory, and then affordability. That's interest rates, unemployment or employment, wages, etc. Then we also want to look at the current pulse on the market. Which direction are the prices trending? What's the percent over asking and how that's trending? What are offer terms? Are they changing? The number of showings, the number of offers. Obviously, those last few points here are things that I'm going to sense out on the field. So if you have a relationship with an agent who is out on the field and doing lots of business, they're going to be able to share this information and the changes. That's not something that is easy to track, like the price trends and the percent over asking and the inventory and sales and such. So Santa Clara County housing market inventory, look at that. I put a giant yellow arrow because it is record low. Look at this 20-year history. We have never seen, except for in 2017, 18, this kind of inventory. But if you go back and look at the summer, which we're right here in the middle of the summer, July, with this data all the way through June, there is not a June or July with inventory levels this low, not even in 2017 or 2018. Those were winter lows that we hit there. So we have record historical inventory. That is a huge factor of what's going on with general basic Economics 101, supply and demand. So let's talk about that demand. So there's a huge shift in the number of first-time home buyers, the highest in 10 years. That is a factor, as well as if we look at the interest rates and the affordability, the high-income earners have been insulated from the unemployment that we experienced in the last 18 months or so. Only 10% of jobs that were lost were high-wage earners. So those people have been capable of making purchases. Plus interest rates, look at this history, 1971 all the way through current. We are at record lows in interest rates as well. So yes, the prices are up, but the interest rates are so low, it's making it more affordable. Here's a quick snapshot of the California-wide housing market. It's all positive. The price is up quite a bit. The unsold inventory or the days of inventory is about 1.8 months, and the median days on market is only 7. That is significantly down. So really strong California-wide market. California also set new price records. Look at these increases, up, 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 up. So the price trend on California-wide is still going up. And the percent over asking, also California-wide, has hit over the 100% mark. And we haven't really done that much before on a California-wide average. So really significant to see this kind of overall average percent over list price. Now let's look at the local pulse. The price trend direction, also the same, very high, up, up, up. Sales, the number of sales is this dotted white line here. It looks like this is a 3-month moving average, so it's changing it a little bit, but it looks like it's starting to level out is what I would guess. Now we're going to look at the history because I'll tell you that's pretty seasonal. So are prices going to be leveling? That's something to consider and think about. The current market pulse, as far as percent over asking, has just been up, up, up. But again, a 3-month moving average, we see that it is settling. It's not continuing at the same pace of increase that it did since the beginning of the year. And lastly, days of inventory is very strong. The demand is very strong in Santa Clara County, and I do believe the demand is going to continue to increase into the fall as more and more local companies open up and require their employees to be back to work. I do feel that a lot of the companies are doing some sort of a flexible schedule where they're maybe only coming into work 2 or 3 days a week, but they still need to be in to work. And so there's going to be people wanting to buy local housing because they do still have to commute. Their probably tolerance for the commute is a little bigger because they don't have to do it every day. But demand is still strong, days of inventory is still dropping, and therefore I think that these are all very strong indicators that our market is doing very well. A current market pulse, the number of offers and terms and showings, all of that is still really strong, but we are still experiencing multiple offers, but I would say it's definitely slowing. In the spring, we were seeing 8 to 10 offers. We're now seeing more like 2 to 3 offers, unless it's a very special house, it's getting more than that. The number of showings is definitely going down. I had a listing in February that was getting 15 showings a day. I mean, during the week even, and now here we're getting, 4 to 5 a day on a really good day, and that's usually only Friday, Saturday, Sunday. So definitely that's slowing down. We are still experiencing non-contingent offers. Contingencies have not come back except for in some of the first-time home buyer properties. There are some appraisal contingencies, for example. So the market continues to be strong, but I do see a slight shift. Is it a bubble? I definitely don't want to call it that. Seasonal shift? Likely. Let's keep going. So a few red flags to think about. The biggest gap, this is California data, actually from a Google consumer poll that talks about how many people think it's a good time to sell minus how many people think it's a good time to buy. And right now the gap is biggest than it's ever been since 2018. People don't think it's a great time to buy, but sellers of course think it's a good time to sell because they get a great price. So that's a big gap telling us that probably there's going to be a mental shift in buyers coming forward. Also, there's other concrete signs of buyer fatigue settling in because the mortgage applications. Typically, we are going to see strong mortgage applications like we did here in the spring when people are excited to get into the market. And that has really dropped in the last month or two. And we saw something like that right when the pandemic hit as well. And then in the holiday season, we tend to see that as well. And we're starting to see a little bit of a dip again. So, those are important factors to tell us that maybe the demand is changing. Here we see the sales are also losing momentum on a California level. You see the arrow on the far right-hand side going downward. In Santa Clara County, the price trend direction is still up. Percent over asking price is leveling. The last few months, it's been holding right around 10%. So it's still very strong, but it's not continuing to increase. And the number of sales peaked actually in April. So that's an interesting sign as well, because typically sales would start to shift seasonally, and you can see these green bars here at the bottom. Maybe I should zoom in for you. These green bars here at the bottom are the number of sales. So obviously 2021 is significantly higher than 2020 and even 2019 and even than 2018, right? We've had several months of really strong sales, but you can see the trend is actually downward. So my forecast is still optimistic, but I expect a seasonal slow. The demand is slowing, which is going to cool the price growth. And until we get more inventory, I expect prices to likely hold. But if we look at this here, this record low inventory is just unheard of. And, until that gets fixed, I think our prices may level because the demand is expected to slow down with the seasonal fall coming in. But I don't expect a price bubble to pop, or I don't expect a huge price decline either. Thank you so much for watching. If you have any comments or questions, please do look below, as well as in the description below. I will have some videos that you should watch next to understand days of inventory and the current San Jose market update.